Remember what happened with the Archegos capital management scandal? Lots of banks like Credit Suisse and Nomura in particular, which is the top, who lost what? More than $4 billion, okay? And that was because they were working hand in hand with that Archegos as the hedge fund. Well, that was back in what, March, April. Now, Nomura, which is one of the top banks in Japan, is now saying it's cutting all ties with hedge funds in Europe and hedge funds in the US. This is somehow connected to this whole collateral and hedge funds going all the way to even more than they should possibly need to go in order to short the markets. I mean, if you really think about it, guys, Nomura is a Japanese bank, one of the top. And the Japanese market was kind of stagnant. And they started working with hedge funds in the US in order to, increase the revenues. The good thing with the stock market is when everything goes as well and you are overextended in terms of margin calls, it's great because you're making tons of money. But when things are not working exactly as you intended, and you are so extending margin calls and loans, that's where it really gets to start ugly. And that's exactly what happened with Nomura and Archegos. Now that Nomura decided to pull back and to cut all ties with the hedge funds in the US and in Europe, that's good news for AMC and GameStop. Because Citadel, even though it has tons of billions of dollars under management, when they go for plays like AMC, when AMC was down, what was $2 a share or even $5 a share, they could have covered. But because they thought we are dumb money and we don't know exactly what we're doing, well, they decided to be greedy. But guess what? They are the ones losing money. Even today where we dropped 10%, they are the ones losing tons of money and paying interest on top of that. So if more banks, which I believe were already looking at cutting ties with the hedge funds like Citadel, well, I wouldn't be surprised if in the near future we'll also hear more banks in the US or even top banks around the world cutting also ties with hedge funds just because, hey, they already know. I mean, they already know that there is no way around these guys. There is no way around this. Citadel has to buy back the shares because, as I mentioned earlier, they could have covered at $5. It went all the way down to 60. Even if we are dropping, we all know that they have to cover, especially if the SEC is now saying, hey, this whole payment for order flow that you guys are doing with Robinhood and rerouting the orders from the retail traders, well, first of all, it's not even a thing. It's not even allowed in the UK. It's not even allowed in Canada. And the UK is the biggest, is a bigger stock exchange than the US. It's true. Check it out. Okay? So if in those two big places of markets in the world, payment for order flow is not allowed, well, maybe the SEC will next also ban this whole payment for order flow here in the US. And if that's the case, guys, we won. We win. Yes, we do. Because with our orders being rerouted, the supply and demand is not transpiring into the share price. But when it does, I mean, talking about FOMO, talking about technical breakouts, talking about short squeezes, margin squeezes, collateral squeezes, whatever you want to put here at catalyst that you think of, failure to deliver, this thing will shoot to the moon so quick, then maybe it's gonna file for bankruptcy. Just saying.